Good morning and good afternoon to everyone. Thank you so much for joining us on our inaugural event dedicated to the European market. So we're very excited. We've got more than 150 people registered for this event, and thank you so much for spending part of your morning or your afternoon, depending on where you are with us. Welcome to Labuan IBFC. We run a lot of these webinars on self-insurance or a lot of the other verticals. I'm not going to take too much time to welcome you because we really feel that the gist of the conversation will happen later on the panel. But just to highlight certain things to some of our friends who it may be the first time that you've come to a Labuan event. We have been around for 30 years more than 30 years as a jurisdiction under the purview of the Malaysian Ministry of Finance. That's very important to understand that we are not a new jurisdiction necessarily, and we are the fastest growing self-insurance domicile in Asia at the moment, and actually a very large reinsurance market. So we're home to about 230, almost 240 insurance and risk management related licenses. So it's a very deep market that Labuan offers in the space of reinsurance and self-insurance. Again, we are very excited to have you. I really hope you stay on and ask difficult questions at our panel later. But in the meantime, what I'd like to do is now bring Ollie on board, Oliver Schofield, Managing Director at RISCS, who will go through what Labuan IBFC has to offer for European risk owners. Ollie, over to you, please.
Well, let me add my good mornings, my good afternoons, good evenings to you all. It is an absolute pleasure to welcome you all to this Labuan IBFC and RISCS webinar. And thank you very much for taking the time out of your busy schedules to join us. And a special thanks to our panelists for agreeing to be with us today. They have huge amounts of insight to share with us as we go through the presentation. Before I kick off, we do have a poll that we would be delighted if you could contribute to as we go through the presentation. There are two questions. The first one is very much geared towards our friends from Europe. And this question is all about whether or not you would consider using an Asian domicile for your self-insurance needs. The second question, which you can see on the screen, is more focused towards our Asian audience, discussing how they feel the market has responded in the pandemic and whether or not this will guide your decisions about using self-insurance more as we go through towards the end of the year and into next year. We'll keep the poll open for about 10 to 15 minutes. I will give you a couple of minutes warning before we close the poll, because we want to be able to discuss it as we get through to the panel session. So please do have your fingers on the button and contribute. That would be marvelous. So introducing Labuan. Labuan is a beautiful island off the coast of the island of Borneo, nestling in the Bay of Brunei. I have been there, and I must say it is one of the most beautiful places that I have visited. Labuan is a very well-established leading insurance and reinsurance destination of choice for some of the largest global insurers and reinsurers. And specifically for our purposes today, has become a very important captive domicile in the Asian theatre. It is, the word Labuan comes from the Malay word, I've been reliably informed, of Labuhan, which means a harbour. And I've probably just absolutely killed the pronunciation of that word, but it means harbour. As Annie said, as Farah said, it is part of the Federal Territory of Malaysia, and we'll talk about that a little bit later when we look at the development of midshore domiciles. The primary industries are international investment banking and specifically insurance services, as well as oil and gas. It has a good number of captives already and an increasing number of cell captives. And it is the only Asian domicile that has both captive and specifically cell captive legislation. I'd like to touch just on how midshore domiciles fit into the overall vernacular of captives. We have onshore characteristics for those would be that they are located within a country, be that in the States when we're looking at federal or state locations, or it could be places like Luxembourg, France, Nordics, etc. Very much embedded within the insurance regulation and activities of their particular countries. We then have the offshore locations that are independent governments, self-determining, and good examples of those are shown there: Bermuda, Cayman, Guernsey, etc. And then we have the midshore. And these are the characteristics for midshore domicile are that they are self-regulated financial centres. They do have their own regulators. However, they are very much part of an overall national government, which is very important when you consider these locations from the point of view of them having close and robust regulatory and fiscal ties with their home country. And you can see I've put a couple of examples there: Gujarat, which is a conversation for another day, and obviously Labuan, which we're going to be focusing on this morning. So the main part of the discussion this morning is why is Labuan a domicile that should be of interest to European and EU and also in some cases North American, South American buyers, but particularly for today, European buyers. Well, we've established a few cells in Labuan this year for non-Asian businesses. And what attracted them to consider Labuan as a domicile is, first of all, the robust regulatory regime. Now, all of those of us in the captive sector know that there are perhaps more than 100 different locations around the world that claim to have the ability to offer captive services. But you can whittle that down perhaps to a list of 20 to 25 that really can deliver on having a robust regulatory regime that has been checked and considered by people like the OECD as being able to host and provide the appropriate solvency and capital protections that are needed for the captive sector. The second reason why we recommend Labuan to our clients is the highly developed support infrastructure. Now, this is something that in the Northern European hemisphere, we expect there to be a robust support infrastructure. And you look at the locations that we all use all the time, we know that they have, whether it's the banks, the auditors, the accountants, whether it's the lawyers or the reinsurance or insurance services or captive managers. And of course, Labuan also has that as well. It has a very highly developed support infrastructure. And it is actually very easy to do business there as well. The speed of being able to open bank accounts, the speed of being able to get the applications processed and into the regulator for consideration. This is all something that we have found to be incredibly favourable when we're working with our European clients. Like various other domiciles, Labuan have recently introduced their fast track authorization process, meaning that the whole application can be turned around in 14 days max, rather than obviously in the old days before people started moving towards fast tracks, a process that would take several months. And I think that's particularly important in the market in which we find ourselves at the moment, where decisions sometimes have to be made fairly close by renewal as to whether or not an organisation is going to formalise their captive approach, and having that fast track process is of significant importance. Particularly attractive to some of our European clients is the competitive cost base of doing business in Labuan. Not only are the requirements for capitalisation much more competitive than other jurisdictions, the on costs of actually using managers, lawyers, accountants and others within the domicile of Labuan are significantly lower than in many other jurisdictions. And I think finally, for the reasons why we're recommending Labuan to our clients in Europe, is that Labuan is very much considered as being the Asian captive and sale captive domicile. It is the only domicile in Asia that has a specific cell captive legislation. Farah and her team at the Labuan IBFC are very supportive, very open to doing business, incredibly approachable. They have spent time and effort over the last few years to become visible to the European captive environment, and they are specifically targeting international growth. They are very much welcome and open for non-Asian business. I'd like to share with you a couple of case studies of two of our clients that we have recently established cell captives for in Labuan. They are slightly different, but there are certain common themes that run between them. The first one is for a European headquartered business. This cell was established a couple of months ago, and their big problem was that the traditional insurance market capacity for their particular exposure had vanished in the London and in the international marketplace. Their brokers had scoured the world trying to find capacity for this particular exposure, and had come up with absolutely nothing from the traditional markets. However, for this particular client, there was an absolute need. There was a regulatory requirement for them to be able to purchase insurance cover, or to be able to evidence that they had insurance cover in place. So a cell captive was a logical solution for that. And this is something that we all know. It's nothing new from the point of view of how you'd use a cell or a full captive to be able to provide that cover. The challenge for this organisation was that the capitalisation costs in other domiciles they were looking at simply were not economically viable for a business of their size, a business with growth aspirations, but a business that at the moment wasn't really looking at considering £100,000 plus as being an option that was economically viable. So Labuan provides them not only with the ability to be able to establish their cell there quickly, efficiently, but also in a financial way that enabled them to be able to issue the insurance policies and to be able to do so without breaking their balance sheet. The second case study, I appreciate that we're talking about Europe, but this is interesting because this was the first ever Australian company to set up a cell captive in Labuan. They had a similar challenge in that traditional insurance market capacity was very limited, but also, as many of us find at the moment, was incredibly expensive. The pricing had been going up by hundreds of % in their core exposure line of business, and they had been presenting the market with profits year on year and felt that the equation was no longer valid. They wanted also to share in the insurance profitability of their book of business and to be able to plug gaps in their conventional insurance market program. They weren't ready to go for a full captive at this stage, but they did want to have some vehicle that was close to home. So a cell captive is a logical solution, and if you want to set up a cell captive in Asia, then Labuan is the only place that you can do that. So different drivers, but a solution that was driven by a very economically attractive and appropriately regulated environment, so that these firms could not only continue to trade, but also could continue to build out their future business plans. So Labuan provided them with that very attractive solution. I'd like to spend a few minutes just talking about the latest developments in cell captives. There have been some exciting changes in the world of cell captives over the last year or so, and I think it's worth just spending a few moments talking about those. If you cast your mind back to 1996, those of us who were around in the industry at the time, you will be aware that that was when the first cell captives were formally established. The first PCCs were formally established to house the individual cells. Renter captives had been around for many years prior to that, but what was so important about 1996 was that the formalization of the segregation of assets and liabilities under law became a thing. And that was revolutionary in the whole captive space. Over the last 25 years, the industry has grown and grown and delivered obviously amazing solutions to all of the customer base. But now what we've seen in late 2020, early 2021 is the development of the fast track or the pre-authorization process, specifically in Bermuda, in Guernsey and in Labuan, and we know that there are various other locations that are looking at this with keen interest to see whether they should be enacting a similar regime. To me, this is the most significant development in cell captives over the last 25 years. There are occasions when it can take several months to be able to get a captive or a cell established. And with the fast changing market that we find ourselves in, often clients will not have a couple of months to be able to get their captive up and running. We had a situation at the end of last year when a company came to us. They weren't a client at the time, and they said to us that they had just had the most shocking renewal terms for their particular line of business that they were renewing at Christmas time, and they needed a captive. That gave us 3 weeks to get it up and running. Now, 3 weeks in December is just impossible to go the full captive route. But luckily, thanks to the fast track pre-authorization process that Guernsey had enacted by then, we did manage to get that solution delivered within 3 weeks. So I think, obviously no one wants to wait until the last minute, but sometimes circumstances dictate that that's what you have to do. And so to me, that is the most significant innovation that we have seen in the captive space. We've also seen, from a growth perspective, a very healthy growth in the number of cell captives in the last 3 years around the world. And I put this down to two things. First of all, awareness. There have been a large number of conference and education events for buyers and brokers, underwriters over the last few years in various different domiciles around the world, as people start thinking about a more robust, a more long-term stable approach to their own self-insurance exposures. And I think the collaboration that we have seen between various domiciles as they talk to each other and try and come up with solutions that are going to make life even easier for potential captive clients is something to be applauded. Effectively, they are, I suppose, competitors, but what they want to do is come together to be able to provide the very best forward-thinking approach to captive regulation around the world, and applaud it to them. And I think also we have had a situation where clients are becoming much more receptive to the idea of formalized self-insured retention, and that certainly has pushed the growth of the cell captive and the captive movement. And then finally, of course, we can't ignore the hardening market and the fact that risk is continuing to evolve. And that is producing a situation where there are harder to insure risks and totally uninsurable risks. I'll give some examples there at the bottom of the slide. So I think when you add these together, the awareness in the hardening market and the fact that we're seeing innovation in the way that captives, or speed with which captives and cell captives can be established, we get a situation where growth is robust, it's solid, it's healthy, and we expect to see that continuing in the coming years. Before I move on to my last slide, I can just put a shout out to people who are thinking about answering the polls but haven't yet had the chance to do so. That is closing literally in a couple of minutes. So my final comments about the future. People have asked me about the Biden plan for global minimum tax rates, and will that potentially sound the death knell for captives? I've heard the words death knell and captives used so many times over the last 35 years. Captives are much more robust than that. Captives, of course, are not established for tax purposes. BEPS and robust solvency and CFC legislation already ensure that captives pay appropriate levels of tax. So our take is that the Biden plan is not going to be anti-captive. It's going to be very much encouraging organizations to pay the appropriate amount of tax, and that's always what we would consider a captive should be doing. As always in the world, things continue to change. We are seeing re-domestication of captives at the moment, particularly in Europe. where we've seen some French companies and Spanish companies moving their captives back onshore. There is talk about London potentially becoming a captive domicile as well. What that says to me is that governments consider captives to be a very robust and very healthy way for organizations, corporates, to be able to manage their own risk exposures. They're not evil. They are very much pro-business. They're very much pro-supporting organizations in their self-insured journey. We are seeing a significant recalibration of the traditional insurance market, where there is a shortage of economically viable solutions across many, many spaces. And we feel that the captive solution will continue to provide the right right answers and the right coverage to those organizations. I talked about the growth of new risks, and as always, the world continues to change. We see new risks, we see new threats, we see new challenges. These are all constantly manifesting. But from our point of view, the captives and the ART market will absolutely remain the viable, long-term, stable solution for insureds looking for that safe harbour, potentially in Labuan. Thank you very much for listening. I very much hope to see many of you at EMIC in Brighton next month, and potentially in Luxembourg the following month at the European Captive Forum. If you happen to be travelling there, do let me know. We will be there, and look forward to continuing the conversation and to talking about Labuan to those of you who do make it. I will now pass back to Farah. Thank you.
Thank you, Ollie. No, and number one, you pronounce Labuan perfectly, or Labuan perfectly. And secondly, this term, I mean, captives are evil. I mean, the number of times I've heard it as well, and I've not been in the business anywhere close to where you've had, how long you've been in the business, obviously. So let's try and kill that idea, shall we? Once and for all. Joining me on this panel, aside from Ollie, will be, we have Rizwan Arifin, Strategic Solutions Director at Principal Re. We have Annie Undikai, who's Managing Director at Brighton International, a long-standing insurance manager. And we have Daniel Landon, who's MD at Protected Trust Services. So I guess when Ollie and I sat down and discussed who we were going to have on this panel, we thought, let's try and take an approach of, let's have the proof is in the eating, shall we say, the proof of the pudding in the eating, shall we say. And we thought maybe trying to get, oh, there we have a user on the panel would be fantastic. So these are the results panel, panel members. So to the European audience, would you consider, what, 75%? That's very heartening, actually. Thank you very much for that. And the next answer, the answer to the next question, please. How the market, do you think the growth is sustainable? Yes, 77%. So actually, 2% divergence between the two answers. Not bad. Very quick question round to the panelists. Your thoughts on the results of the poll, please. Anyone?
Well, I think it's that's very encouraging. It's very heartening. I am delighted that people in this part of the world are remain curious, remain interested in exploring other opportunities. Captives and the captive industry in Europe has often used, and for years has used, locations such as Bermuda, Cayman, Barbados, and they're very interested in looking at domiciles all over the world that can provide the choice, the robust infrastructure, and everything else that I was talking about over the last 15 minutes. So it's very heartening to see that.
Yeah, so I guess, Daniel, lots of people following up in your footsteps then.
I hope so. I think people that will I think it's an understanding you need to learn, part of the journey, to really understand how a good or a sell captive can actually benefit the business. So yeah, it's I'd recommend it. I think it's great.
Annie, here is one. Your thoughts on our results?
Go ahead, Annie.
Oh no, okay. I echo what Oliver says. It's really heartening to see 77% on the European participants who said they consider Asian domicile. So really great. Welcome to Asia and set up your captive here.
I mean, my view is that I think considering the captive option must be an integral part of any broker's pre-renewal agenda with their clients. And especially now with the hardened market, which is not about to go away anytime soon, even more so. And you know, it really, and Labuan has the right potential for it.
Yeah, I mean, we keep saying, you know, the captive market in Labuan, but really the captive market is but a small sliver of the larger reinsurance market. And you know, I always say that it takes an entire jurisdiction to raise a captive, like a bit like a child in a village. And it is true. I mean, that's the thing about a captive that's very unique, and that's why one of the reasons we feel Labuan's getting to be a bit successful in this space is because we're not a one-trick pony. We have an entire huge ecosystem of 200, you know, the license holders in total. Labuan's home to more than 850 license holders across the entire spectrum of financial services. I'd like to start our conversation. So please, we apparently have not got any questions, which I'm very disappointed about, to be honest, because we like making, you know, rolling with the punches, as it were. But we'll start with Daniel, shall we? Daniel, we wanted to ask you, you know, how did you hear about Labuan? And, you know, what were your thoughts? I mean, you know, when someone came to you, presumably it was Oli, came to you and said, have you considered this jurisdiction? You'd be like, you what, where, how? You know, I mean, what were your initial considerations, and when, how, and what secured your decision in choosing the domicile?
Okay, first of all, if you're outside of the insurance market, you don't know what a cell or a captive is. So
excuse me. Yes, I jumped.
You need to be really lucky and find a partner who can start educating you in the right way and actually understand your business as an individual business, and not just trying to write a bit of paper that just fits what they happen to have that day. Ollie introduced us to a cell and said, look, this actually might fit the business. We spoke about it. Lots of questions. Obviously, you get the initial one, especially with our business partners within the business, was, is it safe? Can we do it? Why are we doing this in Asia? And looking at that around like this. So it was an educational thing. Once we got past that and we had a basic understanding of what we were doing, then we could actually start formulating a product around the business. And I know there's a lot of talk about cost, but I think cost is actually secondary to the control it actually gives you. You can have a policy which actually fits the needs of the company that you have, rather than trying to get the company to fit within the policy that you're given. And that's a fundamental difference when you're in a highly regulated industry, as we are in the UK, where you need to have a specific policy and companies operate differently. So for me, the control side of it and working with Oliver was allowed us to sort of put the two together and have almost a perfect fit for the business, which is the first time in 12 years we can say that. So yeah, it was a good journey.
Thank you. And you mentioned control in our prep call that we had a couple of weeks ago, and you were saying that it's just really made such a difference to the business and how the business is able to be run. The fact that you have control now over the risk that the entity is exposed to and how much you retain and that. But clearly, sorry,
it's the policy wording as well. So when I say control, it's you. Every year you go for renewal, and you always have that question mark about what's going to happen this year, and where the market has. When we say the market's hardened up, say the market stopped. there is no market, so you do start looking at alternatives, and the control for us was certainly has proven to become more important than the cost was. And when we first started doing it, it was all about cost, and I think that's when you're looking at sales and captives, it's the control, and I can't stress that enough. It's that ability to start dictating your own terms is huge.
I need to ask you this question. What was your biggest worry about using the jurisdiction? What was your biggest concern? What was the biggest?
just never heard of it. You're based over here in the UK. You don't know, and you do hear horror stories, and you hear Chinese whispers and stuff. So, but it's actually
Clearly not about Labuan.
Yeah, and you understand it.
Generally, yeah.
Yeah, and you understand it, and all of a sudden you realise actually it's a very safe and secure model. It's commercially good in the speed that you guys operate, and the availability of product is fantastic. So we always talk about cost because we're in business and profits, everything, and that's what we do it for. But I actually think that the security you get and the control that you get can actually increase your profitability, even though you may be paying slightly more to set the product up initially. So the benefits far outweigh anything else, I would say.
Okay, so just general awareness. Ollie, I wanted to go to you for a minute because we've got a question earlier here from Rich, actually. In what circumstances in an Asian domicile of interest to a European headquartered company? Is it simply when it's operations or significant risk in Asia Pac, or is it, presumably maybe it's more than that even?
Yeah, thanks, Farah, and Richard. Good morning. Thank you for your question. The answer to that is it is attractive to organisations that have operations in Asia Pacific and do not have operations in Asia Pacific. We're currently working with an Italian business whose operations are purely in the EU, and they are looking at Labuan as being a potential captive domicile. For a variety of reasons, mainly to do with the speed of establishment and the competitive cost base. So absolutely, it is there for businesses that do not have any exposures in the Asia Pac region, just as much as it is there for organisations that have exposures in the region. Treat it like any other captive domicile. You can be UK PLC that has a captive in Bermuda. You can be a French SA that has a captive in the Cayman. So it is for everybody.
Yeah, I think one of the things we did very deliberately when we started really expounding the benefits of captives in Labuan is the fact that we wanted the growth of captives in Labuan has always been very domestic for the first 10, 15 years. And then we wanted to grow it into Asia. And then now, having had a little bit of success in Asia, we're starting to look at it and saying, okay, let's really open it up to everyone. We've always been open for business for all business, regardless of which jurisdiction or which part of the world you come from. But I think it is a very structured approach that we're taking towards, exposing Labuan to different parts of the world gradually. There's a question here as well. I think, Annie, it's probably best suited for you, from Petro. How is it frequent to receive a tax assessment in Labuan for captive?
Tax assessment is once a year, yes. And we are taxed prior rather than pre. So basically, after you finish your audited accounts, then you submit your tax return, which is normally on the 31st of March, except during the COVID pandemic, which is there's a relief that we submit on the 31st of August. So it's after you've done your accounts.
Yeah, so it's once a year.
Yeah.
It's important to note that there are two competent authorities in Labuan Financial Services Authority, that's the FCA basically, and they report directly to the Ministry of Finance in Malaysia, and the Inland Revenue, which is equivalent to the HRMC, and they report as well to the Ministry of Finance in Malaysia. And I think that's one of the things that I know Ollie discussed earlier about Labuan being this Midshore proposition. And really, it's true, we are obviously a Midshore proposition, but it's important to also remember the beauty of Labuan sits in the fact that there is always a constant pull and push within the jurisdiction. We always want to be business friendly, and yet, as part of Malaysia, we have to ensure that the best standards are adhered to. So we end up being somewhere in the middle, and hence this Midshore proposition. I think that bit is important. A lot of other jurisdictions are standalone nations. We are not a standalone nation. We are part of Malaysia, and we are assessed by the OECD, by the FATF, by APG, by all the assessors collectively as part of Malaysia. And so Malaysia will never allow Labuan to dilute its supervision, enforcement, and regulation. I think that is a very important message that I want to put out, especially because lots of you may not be as familiar to Labuan as possible. We've got a question, Annie, which we'll probably follow up with you from Malcolm. Can the panelists explain the Labuan captive or sell business? Do you need to attend meetings in Labuan? How often? Does all the administrative work need to happen in Labuan? Can it be outsourced? Is English spoken? Is it the business language? You know, just generally, how would running a captive feel in Labuan?
Okay, so there's few different type of captive. I mean, self-insurance in Labuan structures. So if it is a pure captive, yes, you do have to be. You do have to attend meetings in Labuan because you have to have a board meeting in Labuan for you to enjoy the 3% tax. The Labacha. You have to have some employees because you have to have economic substance in Labuan for the pure captive. Yeah, so at least once a year you are there. You could outsource certain work that need not be done in Labuan. That can be outsourced to any part of the world. For example, underwritings and things like that, or claim management. But for the sale, by nature of what it is, it's a sale of a bigger of a PCC. So everything is done by the PCC. Right, so you don't have to come for meeting. There's no board of directors. So the economic substance is complied by the PCC, by the core. So you don't have to come to Labuan. But it's good for you to come to Labuan and visit Labuan and see Labuan. And yeah, so that's and then we have another type of structure in Labuan, which is very, very similar to the ICC, the Incorporated Cell Company. So basically what we call in Labuan is the subsidiary rent a captive structure, where you are a subsidiary of core, and that you have a director. So you do need to come to Labuan because it is a company on its own. It has its own tax number and you have to comply with the economic substance and things like that. So you need to come to Labuan. So it depends on which structure you opt for. So the easiest will be the cell currently.
Yeah, because the cell will not have any economic substance requirements onto the cell, because those substance requirements are met by the core,
yeah,
that manages the cell, right? And yes, the tax would be 3%.
Yes, if the core is taxed at 3%, everything else is taxed at 3%.
Okay, so it cascades down, and the kind of business that goes into the cell will also be co-determined by the core owners.
Yes.
Yes.
So you have to, the core owner will need to see what type of risk you're bringing in. So you need to discuss with the core owner so that they know whether it fits into the core business.
Correct. Okay. So I wanted to ask Ollie actually this question. Actually, there's a follow-up question from Petro. He says, thank you for your response. Are there any other many questionable issues for cost deduction in construing the tax base? So I guess, are we looking at so after the deductions, what kind of deductions are allowed before you go into that level of taxable income, as it were?
Oh, okay. I could answer that. In Labuan, you are taxed based on your audited profit. There is no difference between audited profit and taxable profit. So it's the same. Yeah. So you just take whatever that you have. So there is nothing that is not deductible. Everything is deductible. Whatever you put in your expense is deductible. And there's nothing new allowable expense to be deducted. If it's not allowed in the audit, then it's not allowed. Yeah. So
it is an extremely simple tax regime.
Yes.
Extremely simple. So there are no tax credits necessarily, but everything is able to be expensed
yes,
in order to reduce that construing tax base, as it were. Yeah.
So it's every year is basically that year tax. If you make loss that year, you will not be able to carry forward your loss.
Correct.
It's basically year to year tax.
Yes. It's extremely simple. Ritz, I wanted to bring you into this conversation a little bit. You know, we speak a lot to a lot of risk managers, and we speak a lot to a lot of independent captive managers. And the question always, you know, one of the things we want to start looking at very aggressively towards the end of this year and definitely into 2022 is bringing the brokers into the captive conversation. You know, because at the end of the day, the brokers are the owners of that relationship. The brokers are the ones that are an integral part. But then I don't know, is it too controversial to say that the brokers have not been exactly captive's biggest proponents? And where do you see value for brokers within the captive value chain?
Thanks, Farah. Look, there's no question about it. You know, there's a tremendous amount of depth of knowledge that the broker has looking after the client's risks. And unfortunately, in many cases, none of those discussions and solutions include the captive subject. And I think one of the principal reasons for this is that, you know, the message isn't being gotten across to the middle markets, or the middle market brokers, because, you know, partly because it's, you know, a captive, to set up a captive is not cheap. You have to have, you know, a team to set it up. So, you know, there's the economics of it. And so my view is that one way to overcome this is that for the middle market brokers, we need to consider captives as part of our tools of trade, and to get that engagement, to deliver that professional service, we, you know, a painless and efficient way to deal with it is to link up with an independent external captive consultant. So that's where they can then help do the feasibility study, go through the formation of the captive process and the ongoing management of it. So I think it's a question of getting the education and message across to as many on different platforms as possible.
Yeah, absolutely. Ollie, there's a question here from Gareth that maybe you might want to answer. Earlier, you talked about the cost efficiency and the nature of setting up, the cost-efficient nature of setting up captive in Labuan. Can you discuss how it compares to the more local European domiciles? And maybe you want to also talk about the solvency advantage of Labuan as well, when you're looking at cost. You know, so it's not just necessarily the operational cost or the setup cost. There's also that ongoing solvency benefit.
Yeah, absolutely. Thanks, Farah. Thanks, Gareth, for the question. The costs of the establishment phase in Labuan will come out somewhere between $10,000 and $15,000. The cost of establishing a cell elsewhere in the world averages somewhere in the region of $20,000 to $25,000. For the annual ongoing costs, the ongoing costs in Labuan are around about the $30,000 mark. That includes all of the license fees, the bank fees, regulatory fees, management fees, etc. A similar comparison elsewhere in the world would be somewhere between anywhere from $50,000 to $85,000, $90,000. Obviously, these numbers are very, very dependent upon the line of business, the amount of work that's going to be required in any claims analysis, if there's going to be any external actuarial work required, etc., etc. But certainly the delta between the two is somewhere between 15 grand in the setup and somewhere in the region of $20,000 to $30,000 in the annual operational side. Now, when it comes to the capitalization, minimum capitalization in some of the domiciles in Northern Europe range from £100,000 in a non-Solvency 2 jurisdiction. Obviously, if it's in the EU, then it would have to be fully compliant with Solvency 2, which will have different tiers depending on whether you're a full insurance company, a captive, a non-life, a life, etc. But as we all know, Solvency 2 rules would have to be adhered to. If you head over to and I know you didn't ask this, Gareth, but just to add a little bit more colour, if you head over to places like Bermuda and Cayman, they are on a par with the £100,000 mark that I mentioned earlier for places like Guernsey and the Isle of Man. From a capital point of view, from the solvency point of view, Labuan is very flexible in the way that they approach the amount of solvency that is required to meet the underwriting. There are rules, there are formulae, but they are very flexible in the way that they actually look at the amount of solvency capital that is required. The solvency capital levels in Labuan are lower than they are in other jurisdictions. And that's not a negative. Some people would say, well, why are they lower? Is that sending the wrong message? Surely we should be having a very high level, robust, extremely high amount of solvency. To which the answer is no, I disagree. I think solvency is something that governments assess when they're putting together their regulations for looking after all sorts of financial institutions, including the captive and sale captive world. And the solvency that is required to host a captive is very, very different from the solvency that is required for a major global international insurer, reinsurer. And they take that into consideration. So the solvency levels in Labuan are certainly lower than we see elsewhere in the world.
Thanks, Ollie. And just to be clear, those numbers that you were quoting with regards to cost, that would reference pure captive, right?
Yeah, that's for pure captive. I mean, sale captives are well. Sorry, let me double back on that. The costs that I referenced there are for anything between a sale and a full captive, because it's always very hard to say, well, how much does a captive cost? Well, the answer is, well, what sort of captive do you want, and where do you want to put it, and what do you want to put through it, and how much external services you're going to require, and are you going to need a third-party claims administrator because you're having 100 claims a week, and so on and so on. So, they vary. But obviously, if somebody's got a specific opportunity in mind, give us a call and we'll work up the numbers.
Yeah, I mean, we're not selling off-the-shelf products here, obviously. I mean, these are very bespoke solutions, so it really depends. But there's a clear cost efficiency there. There's a question here from Alexander, and I don't know whether it's Rizwan, Annie, or Oliver would be able to answer this. There are fronting considerations. So what are the fronting considerations from writing from Labuan to Australia, New Zealand, or Europe? Who would like to take that question?
Well, I think there are two parts to it, and Annie can answer from the Labuan point of view, and I'll answer from the European point of view.
Yes.
Do you want to go first, Annie, or shall I kick off?
You kick off.
Thank you very much. Alexandra, thank you again for your question, and good morning to you. The fronting considerations do vary country by country. If you are an EU-based organisation, i.e. you have a captive in the EU, let me just clarify that. If you have a captive in the EU, if you have a captive in Labuan that is writing into the EU, very clear here, captive in Labuan, writing to the EU, you will need to have an EU front. That's not Labuan's rules, that's EU rules. If you have a captive or a sale captive in Labuan that is writing into the UK, for certain classes of business, you do not require a front. But for certain classes of businesses, you do require a front. From Labuan's perspective, if the receiving country, i.e. the UK, does not require a front or a licensed insurer in that country to be able to issue the policy, then you don't need a front from the Labuan or the UK perspective. If you are dealing with certain classes of business in the UK where a regulated insurance company in the UK is required, then you will need a front. So it's not so much a Labuan driven thing, it's a receiving country driven thing.
Yes. That's totally correct. Basically, Labuan does not regulate that part. It is where you are domiciled, where the risk coming from. So if the risk is coming from EU, like you say, you must have fronting company. From the UK, certain risk. From Singapore, you don't need fronting company. Also depend on which risk. Malaysia, definitely you need a fronting company. Everything what you want to put into outside the jurisdiction, you must have an admitted insurer to insure the risk first. So, or you get an approval from Bank Negara. Hong Kong, I think you don't need. So it depends where you come from.
Yeah, so Labuan does not impose any rules. It's more about where that risk is going into, or yes, coming from. Sorry.
Yes.
Yeah. Okay. So the question flow has run out. So I have a question actually. I have a very interesting question, I think, anyway. You know, Oli, when we were discussing this in the pre-panel, you were talking about how the direct insurance market is broken. You talked about how really it's just not satisfying the risk needs of everyone out there, and how this is going to drive more formations. So if I had to kind of, you know, with a couple more minutes left on the clock, if I had to ask each and every one of you about how you feel the growth of self-insurance. So let's, you know, self-insurance is much larger than just, you know, either sales or it's an entire growth. And, you know, maybe Rizwan, you might want to talk a little bit about the benefits of some of the ART work that you're doing as well, specifically for the captives as part of this answer. But, you know, how do you see the growth? Do you not think that, you know, 2 years on past the pandemic, the market was harder before the pandemic, then the pandemic came and it got harder. Certain lines are impossible to get any cover for. Do you not think that all this will settle in the next 12 months? And do you not think then, you know, that the demand for self-insurance vehicles is going to wane?
I think if I may kick off first,
please.
Clearly, from what we're seeing in the reinsurance market outlook, this hardened market is not going to go away anytime soon. The CEO of Swiss Re recently said that the hardening of the market is going to continue well into 2022, and you know it's not about capacity. The capacity is there, but it's more about having to be more disciplined. And as a result of that, it does force the client to look at options. And you know, it's a no-brainer that you have, if the numbers work out, the captive solution, whether it's a temporary, you know, a short-term deal for several months through a sale, or a longer play into the captive, into a full captive situation, it will deliver solutions. So you know, for me, irrespective of whether the current market conditions, you know, with the pandemic, we have this the issues relating to contingent business interruption and all that goes with it, and how it affects clients. It will not stop there. The risks will continue. It evolves, and I think the more attuned clients can see that rather than dollar swapping at the primary level, they want to bring back some of that underwriting profit and expenses that are being enjoyed by the markets. So that kind of.
Can I just add something? I would say as well that I think we often look at COVID and say, well, okay, after COVID, when things get back to normal again. The reality is the insurance market was challenging before COVID. And it's been getting harder and harder for 5-10 years. It's not a new, you know, COVID's maybe accelerated that risk appetite for the underwriters. I can't see us going back to sort of 10 years ago, where there was products in the market which fitted the requirements of businesses in our sector. It wasn't there before COVID, so I can't see us in a couple of years' time going back to normality again. The other thing I would say is, and this is some advice for anyone listening who does go out and set one of these up, is read the legislation really carefully around what you're trying to do. And you will find that more often than not, the legislation can be a bit of a friend to you. If you look at it and understand it and actually get the sell to work for you. Don't just go into this thinking, well, that's what everybody's told me to do over the last 10 years, therefore that's what I'll go and do. Sit down, read the legislation, speak to your broker, and look at something that's going to be there for 10 years. This isn't something you just set up and go, well, okay, I'll do this for 12 months or 2 years whilst we're in the middle of a pandemic because I need a certain product for the business. Look at it and go, well, how is this going to look over the next 10 years? What opportunities does the sell actually give us as a company? And again, that goes back to what we were saying earlier on. You can become quite blinkered in your approach towards insurance and lose sight of actually the benefits of having control and actually the profitability that can give you. So read the legislation, everyone. It's important.
Thanks for that reminder, Daniel. Yeah. No, and also, I think it's incredible to see the growth. I mean, in Labuan, we've seen tremendous growth in the last 12 months in sales. And I expect actually a lot of these sales are seen, well, I've been quoted as saying this before, as band-aids for certain cover that they need. But then as they get to know the beauty of self-insurance, I suspect that a lot of them will convert to pure captives. They will migrate into a more holistic risk management solution. It could be possible because I think the opportunity is great at the moment to kind of, dabble in self-insurance and gain the benefit, feel, experience, read the legislation, as you say, and then maybe move on from there. Annie, Oliver, your thoughts?
Yeah, sure, thank you. Yes, I have been quoted as saying the current direct insurance market is broken. And this was actually a comment that was made to me by one of our clients who was bemoaning the fact that when COVID took hold in Europe, 33 insurance markets in London in the travel insurance space pulled out of the market in the space of 3 weeks, leaving that particular client with no cover for their clients. Now, that, he said to me, is symptomatic of a broken market. I've heard other clients talk to us about the fact that they've seen their insurance rates increase by over 1,000%, particularly in the professional and financial services line. No organization, however big they are, however much money they've got on their balance sheet, no organization can stand that type of chronic instability in their long-term budgeting planning. And again, that client CFO said to me, there's something wrong in the market if it reacts like this. Now, we all know how the insurance market works. We all know that it goes in cycles, and we all have seen the extremity or the extreme cycles back in the mid-1980s that fostered the growth of ACE and XL and OIL and OSIL and TRAC and Rail and so on. And all of those solutions were delivered by captives. All those companies I just mentioned were all essentially captives when they first started. And so the captive is there to provide protection against the chronic instabilities that inevitably will be manifested in an open and free market. That's what you get in open and free markets. Not a criticism, it's a fact. And, from the buyer's perspective, it's fairly chastening to those of us who've been in the market for 30 plus years. It's fairly chastening to hear the clients say, your product is broken. And I feel that captives can help provide the solution to that.
I may quickly just add to that, Ollie. I'm reminded of when at one point, one of the oil majors many years ago, reviewed their position and said that, look, the financial strength of many of our insurers on our program are much less or are more dodgy than their own balance sheets. They didn't need to take this. So that created a new direction. So and fast forward to 30, 40 years, here we are today. It hasn't, those principles are still there.
Annie, do you have anything to say?
Yes, I mean, basically self-insurance everyone is self-insuring anyway now, whether you have a captive or not. There is certain part of your risk that you are insuring yourself. So a captive is just a formalized form of self-insurance, right? So basically, once you understand what captive is all about, and once you start, I think no matter what, whether it's hard market, soft market, people will continue because now you understand what you are supposed to do if you have a captive, how you manage your risk through a captive. So I think, and like Ollie said, it flattened the rates. Yeah, so it can be hard market tomorrow, but you're paying the same rate through your captive. So if you have, I mean, unfortunately for people who just started their captive this year when the market just went boom, then they'll have to pay a lot. But if they have their captive like 10 years ago, they could be paying the same rate until today, you know, because they have the capacity, they have all that already. So it's a formalized form of insurance, and it's separate from your holding company or the parent's balance sheet. It has its own to insure you. So basically, as long as you don't take the money out of the captive every year, so you keep it there. I mean, it helps you to manage your risk, and it can be a cost center and a profit center on its own as well at the end of the day.
Yeah, and that's something that we haven't actually discussed because we've been too busy talking about, you know, setting one of these vehicles up and what you do and comparison. But, you know, the beauty of a captive, based on my limited experience, is really your retained profits.
Yes,
you know, as you start managing it, as you start managing it properly, your retained profits and what you can do with it just opens up a whole new box of opportunities. You know, aside from just owning your risk and making sure that you're covered properly. So I think, you know, that is another discussion for another day. I think because you know, being able to manage your retained risk, your retained profit is something substantial. And really, yes, it's true. I mean, we've seen growth in India, we've seen growth in China, i.e. wanting to really house their own captives. So clearly these countries are very clear that there will be maybe a mismatch in, let's say, demand and supply in the box standard insurance market, Oli. You know, that they acknowledge it, and so they are trying to manage it by having jurisdictions within their own country in order to manage, in order to inculcate a self-insurance culture maybe within their corporations, which is fantastic because, you know, the more awareness there is out there about captives, the better it is for all of us, all the jurisdictions, and the better it is for all the risk owners, you know, and it will only grow from strength to strength. We have actually one last question from Pedro. Do you think it is suitable to set up in Labuan a unit-linked life insurance company? Excuse me, I'm reading this for the first time. Unit-linked life insurance company and obtaining authorization as a European life insurance company to operate throughout Europe and freedom of service regime. Oh, we might want to take that offline, or are we happy to? We're happy to take this offline.
Well, we can take it offline. I mean, the only observation I'd make straight away is that if it's going to be providing cover to individuals or businesses that are based in the EU, then you're going to need to have an EU front that is prepared to reinsure to the Labuan cell or captive. So, you know, it's possible, but one has to understand the regulatory and the legislative implications of that.
Yeah. Okay. Well, thank you, Pedro. Maybe Oliver or Annie, you can get in touch with Pedro to discuss. Yeah. Okay. Well, we've come to the end of this fantastic session. Thank you so much, all of you who stayed behind. We still have almost more than 100 of you who stayed behind.
Oh, wow. Okay.
Thank you very much for taking the time and your morning or your afternoon. Thank you, panelists. Thank you, RISCS, Brighton. Thank you, Daniel, for being part of this. It's always nice to hear directly from a client, a licensee. And thank you, Rizwan, for providing us our broker's perspective, which is very important, especially as the captive market seems to be growing.